Hello guys, how are you doing? I hope you had a great start of this week. We are now at Thursday, and Fridays usually we don't trade because market is on contraction most of the time. We could have a range expansion, but it's not likely. So let's review the trades I sent for VVS Academy. The first trade I'm going to review is a US30 sell. As you can see, we had a sell limit at 26,886.6. When I give these precise levels, I always recommend to either wait for that level to hit or maybe entering a bit earlier, because as this is a very precise level, maybe algorithm will sell before hitting that actual level. So let's go to the chart. The idea behind US30 is that on the daily, we had this break of market structure here with this low, taking out this swing low here. So now we have this range from this high to this low, and we want to anticipate a sell above the 50% retracement, because that's where the premium range is, and that's where banks and institutions are going to be selling. So let's go to the 1 hour chart. We can see here with this candle taking out this high here, this candle left a liquidity void, so price started accumulating here orders, stop hunted going down, taking this equal lows here, then goes up again to take out these highs, and also to see if there is institutional sponsorship on a very important level here of higher time frame. So we had the institutional sponsorship. We had a nice sell-off, now taking out these lows here. This candle here means that we have a break of market structure. So after that happens, we have a swing from this swing high to this swing low. We have this range, price sell-off above the 50 on the premium area. We break again this low, so now we anticipate another retracement of this swing, from this swing high to this swing low, this range. We can even say that this is the range, doesn't matter. The idea is that we have to be looking for sells above the 50. So let's go to lower time frames. Using a few tools I've been teaching on the VVS Academy, we saw that this move here to the upside, taking these equal highs, was actually a fake out, and we anticipated a sell at this specific point due to a level I marked here with my strategy. So after hitting this level, we can see that price instantly reacted to this level, going lower, and well, finally this trade gave a nice risk-reward ratio of 20, as you can see here, and it moved in US dollars around more or less 291 points, or US dollars. So the other trade I sent was a GBP USD sell. Trying to find it here. So as you can see, I expected a sell-off these levels or these levels. When I see two possible reversals forming, I try to anticipate both of them. If one doesn't work, we can enter the other one. In this case, I had this London close time where I expect the high of the day be formed. So let's go to GBP USD. Here you can see that we hit the entry. In this case, the entry wasn't precise, but that's okay. I wasn't expecting this entry to be precise. That's why we have a wider stop loss here comparing to the US30 call. In this case, the trade went as we expected. My main TP, or TP1, was below this low, which was the target for the algorithm to grab sell side liquidity, and the next TP is below this low. Of course, if this trade goes well, usually on Thursday we can get a very nice setup of one shot, one kill to enter a trade for the rest of the days or even weeks. In this case, for this trade on higher time frames, I would like price to go to these levels here and see if there is institutional sponsorship on these levels. Overall, the pair is bullish, so unless this was a reversal, I wouldn't expect price to go lower, because we still have here important levels with a lot of buy side liquidity to be taken. So well, finally this trade gave a risk to reward ratio of 4, and in pips it made 71 pips. Well, so I hope you enjoyed this, and if you want to join the VVS Academy, check the link in the description, and see you guys in the next video.